There are certain moments each quarter when the stock market shows a clear distinction between what I would call the smart money and the rest. To use a betting analogy, it's the difference between the sharps and the squares. And I believe that Tesla is a prime example of this phenomenon this quarter. It's a fascinating case of sharps versus squares. So, why did the sharps favor Tesla, causing its stock price to rise while everyone else was confused? The answer is simple. The CEO, Elon Musk, is executing the plan he laid out in 2016. He has stuck to his guns, and that's exactly what investors want to see. When you're investing in a company, especially in its stock, you want to know that the CEO is following a clear, known plan, so you're not left guessing what the next step is. And fortunately, Musk has done just that. He made his plans public in the Master Plan, Part 2, which was released back in 2016. If you read through that document, you can see that the goals he set back then are essentially being achieved now. Let's break it down. At the first part of his plan, he said, "We're going to build a Model 3. We're going to create a compact SUV, the Model Y. And we're going to develop a new kind of pickup truck." These were bold statements at the time, but fast forward to today, and it's clear that Tesla has checked those boxes. But Musk didn't stop there. He also mentioned the need for a heavy-duty truck and a high-passenger density urban transport vehicle, which is essentially the robo-taxi service. He even made clear that Tesla would focus on advancing its full self-driving (FSD) technology, a key feature that would make Tesla vehicles safer and more attractive to buyers. If you're a smart investor looking at Tesla's stock price, what you should see is a mispriced opportunity. Musk's strategic plan has been unfolding as predicted. Sure, there are hiccups along the way. Sometimes you hire too much and need to trim some fat, or you overspend on capital expenditures, CapEx. But in the case of Tesla's recent quarter, the market overlooked those missteps because the investments being made, such as spending about $1 billion on AI infrastructure, were deemed reasonable for the company's long-term goals. This is where the distinction between sharps and squares becomes clear. The sharps, the savvy investors, saw the stock price dip and viewed it as a buying opportunity. Even though Tesla missed expectations by $2.5 billion, they understood that the long-term plan was still in motion. For them, it was a moment to buy into the company at a 40% discount compared to the company's earlier market cap valuation of $750 billion. The media, on the other hand, has a tendency to sensationalize things, often exaggerating short-term disappointments and focusing on the drama. The contrast between what the sharps see and what the media spins is stark. The media, for instance, might want to focus on negative narratives about Elon Musk, but the savvy investors don't get swayed by the noise. They understand the long-term vision, and they vote with their money, which in this case moves in the direction of accuracy and value. The market, ultimately, rewards those who can see through the noise. This moment in Tesla's growth serves as a reminder to all investors to be cautious about what they read in the media. If you only pay attention to headlines, you'd expect reactions that are completely opposite of what actually happens in the market. The market doesn't lie. It moves in the direction of what's truly valuable, and that's where the sharps are able to capitalize. Now, let's talk about Tesla's journey beyond just cars. For a long time, the company was mainly seen as a car manufacturer, but what Musk has built is something far more revolutionary. The Model 3, in particular, was a pivotal product that unlocked Tesla's mass-market appeal. Now, the company is maturing under the weight of that demand. While Tesla's performance may not always be perfect quarter to quarter, the long-term trajectory is clear. As an investor, if you're focused on short-term precision, Tesla may not always be the best choice. But if you're willing to take a long-term view, Tesla offers a chance to compound your investment over 3 to 5 years, especially when it comes to convertible bonds, which offer downside protection. Despite all of this, there's still skepticism. Tesla's stock isn't controlled by Musk or the insiders. It's largely in the hands of venture capitalists and hedge funds who are playing financial games. The amount of misinformation, manipulation, and hype surrounding Tesla is enormous, especially when you look at Twitter and forums. The reality is that much of Tesla's stock price movement is dictated by financial manipulators, not the vision of the founder. But if you're smart, you ignore the noise. Look at the fundamentals and back the execution of the plan. What Musk has done is extraordinary. He has taken enormous risks, set ambitious goals, and made incredible progress. Sometimes he may miss targets, but that's okay. As an investor, you need to look at the bigger picture. If you take a step back and evaluate what Musk promised in 2014 and what he's delivered by 2019, you'd be ecstatic. Similarly, if you look from 2019 to 2024, the trajectory is clear. Even if you don't agree with Musk's style, the substance of what he's building is irrefutable. At the end of the day, whether you like Musk or not, the facts speak for themselves. The Model 3 is a remarkable car, and I can speak from experience. I bought one myself. The moment you step inside, you realize that it redefines what a car should be. So while some may focus on the noise and the controversies, the substance of Tesla's product remains unchanged. The question now is whether Musk can build the necessary infrastructure to keep up with the demand. Given time and patience, I believe he will. If you believe in what Musk is doing as I do, betting against Tesla seems short-sighted. The stock is protected by downside measures, and there are companies like Apple with $200 billion in cash that could step in and help if Tesla faces any liquidity issues. Even Google, which tried to buy Tesla before, could potentially try again. But let's be clear, betting against Tesla is betting against a cleaner, more sustainable world. It's betting against the innovative future that Musk is working toward. We need to ask ourselves if we want to preserve the status quo, the pollution, the inefficiency, or if we want to embrace progress and a cleaner Earth. Being long on Tesla means investing in innovation. It means backing an entrepreneur who is changing the world for the better, even if his methods aren't always conventional. And historically, betting against such entrepreneurs has never been profitable. Why start now? Tesla's growth and success have been impressive, and as the company moves forward, it's no longer just about cars. The company is becoming a major player in energy too, whether through solar panels, power walls, or the batteries that power electric vehicles. Tesla is becoming a distributed energy business. The transition to clean energy is coming, and when it does, Tesla stands to benefit massively. If you look at Tesla's future, it's clear that the company is heading into a new phase. The real disruption is coming in the energy sector. There are trillions of dollars invested in energy generation infrastructure worldwide, and that system is going to flip on its head. When it does, Tesla's stock will likely surge even further. It's not just about the cars anymore. It's about transforming the way we use and generate energy. To me, investing in Tesla is about more than just buying a car company stock. It's about backing a future that will benefit the planet and future generations. The transition to renewable energy and a sustainable future is going to be one of the most important and rewarding investments of our time. And when that happens, Tesla's stock will reflect that monumental shift. It's a clear bet on a cleaner world, and it's a bet that I'm willing to make.